Hello, hello. It's Tuesday. Boy, guys, I am on such a roll. I am so excited about the work that I'm doing. So I've made a commitment to myself that I'm going to try to come live every day between now and the end of the year to help my clients, my team, my potential clients, or just my sphere of influence understand that now is the time to become a real estate investor. And there's no better time to be a real estate investor when the assets are on sale. So, what do I mean by that? The last couple of years, we've talked about low interest rates, right? Rates have been 3% and 4%. And it has caused this seismic shift in the market where people are like, hey, it's low interest rates. And because of the low interest rates, I'm going to buy another house. I'm going to sell my house. I'm going to move up. I'm going to move down. I'm going to move down the street. I'm going to move across the street. I'm going to move across the town, whatever that looks like. And what's funny to me is that with that shift, when the rates were on sale, everybody's ready to make a move, right? And if you guys follow me, it was just like crazy perfect storm during the pandemic because the new home builders were not building, right? It was the builders were on quarantine, lockdown, supply chain, whatever that looked like. So building came to a halt. And I can speak to Texas in the fact that when building comes to a halt, that's 30 to 40% of our homes closed, especially for first-time home buyers. First-time home buyers like these new home communities for many reasons, but most importantly, they're affordable. And they've got a lot of amenities and they move from a great apartment into a great place with great amenities, whatever that looks like. So we have that. We have people moving to Texas during the pandemic at record numbers, leaving the blue states, coming to the red state, right? And so we have people migrating, people getting the hell out of Dodge, coming to Texas, coming to two states, Texas and Florida, got very, very busy. I know Arizona did too. So they're coming here. There's no new home construction. There's a lot of people who did not want to open their homes up during the pandemic, rightfully so. So they didn't want people just meandering through their house at the height of a pandemic. So there were not near as many houses on the market. So what did that create? It created the greatest bottleneck of all time in real estate in the great state of Texas. I don't know that it was like that in every state because not everybody was exiting and coming to every other state, but I know it happened in Arizona, Texas, and Florida for sure. And we lived it. I would be outside and literally waiting in lines out around houses for an appointment we had to show the house. Crazy. So homes were selling for 50, 60, 100, 200. I mean, I've seen them $250,000 over, right? So because people wanted to move, because they wanted to take advantage of that low interest rate. Well, I'm here to tell you, you are better taking advantage of the low acquisition cost of that asset. Okay, follow me on that. Money is made, and when you buy cars, when you buy anything, diamonds, cars, I mean, any type of commodity, it's made at acquisition. So if you can buy that house for $50, $75, or $100,000 less today than you could have 9 months ago, these interest rates are going to come down. They're already starting to come down. And you guys know what I say, we're one president, one pandemic, or one war away from interest rates dropping. I mean, the feds always end up having to do something to control the interest rates. So, it would take, I don't know, gosh, even if you save $50,000, the recoup time between the interest rate and the cost of the asset is something like 10 years. You will always, always be ahead if you can buy the asset or the property on sale. But what kind of prompted this video today? My good friend, and now my coach, Grant Cardone, sent out an email today, and I always read his emails. We get lots of them, don't we? But I always read them. And this was about investing, and I thought, God, I'm gonna make a video about this because he's spot on, right? And this is what he sends out to his real estate club, which you guys know I'm in the real estate club. I made the decision to invest 25,000. I'm 0.5, top half a percent of all agents in the country. Not just EXP, but all agents in the country when it comes to personal production. I hired a coach. Why did I hire a coach? And I hired the best coach, right? Grant Cardone, because I wanted to play big. I wanted to go to the next level in 2023, and I want to take my clients along with me. And I want to be the most shrewd investor, real estate investor in Texas. And I want to learn from the best. So I made the decision to invest with my good friend Grant. Okay. That being said, he sent out this email today, and it's basically the top 10. Let me get to it here real quick. It is the top 10 or top 12 mistakes that people make when they're real estate investors. So coming into 2023, rates, they're going to be in the sixes. They're probably going to come down to mid fours by end of Q1, middle of Q2. All right. I heard that from somebody with Fannie Mae, and I believe that, right? So rates are going to come back down to a very, very a good rate, a great rate. I mean, we're not going to have pandemic rates. Let's hope we don't. My God, do any of us want to live through what we lived through in the last 2 years? I don't. But there's going to be a lot of assets on sale. How come? Because many investors went out and they put these, when they bought these properties, they put them on 2 and 3 year balloons, 2 and 3 year interest only, 2 and 3 year ARMs. And now they're going to have to renew some of those notes, and they're going to renew it a lot higher rate. So their NOI, net operating income, is not going to be as favorable. And so they're going to dump the asset. They're going to dump the asset. Then they're going to go roll the money into a 1031 exchange, and they're going to roll it into the next asset that they can buy on sale. So, I'm going to tell you now what some of the mistakes are and tell you that we are focusing on investments. I did a segment last night that was really good. The biggest wealth gap in the world is women investing. Women have a $1 million wealth gap over a man who invests, who has the same type of income, same type of assets. But men have a larger appetite for investment, where women tend to hold their money in cash or want to stick it at Edward Jones or wherever and stick it into annuities and stocks and bonds and that kind of stuff. Well, the stock market has failed us. It has failed us in the last year. And so a lot of that wealth has gone away in the last 12 months. But if that money would have been put into real estate, you would have never lost the money. And frankly, you don't lose it in the market until you sell. All right. There's some great programs with self-directed IRAs. So let's just say you've got an IRA out there and it's your 401k. You can go to the bank and you can set it up into a real estate IRA, and you can direct that money toward investments. You cannot do it to buy a homestead, but you can do it to buy an investment property or to get into a fund or to, it's endless. It's endless. But what I'm going to talk about today are the 12 mistakes that investors make. And if you don't have somebody on your side, someone like me, who studies this, who makes this our whole life's mission is to be the best and to understand, then you need to find somebody, right? If you're not in Central Texas, shoot me an email. I will get you with the best person in your area. So number one is not investing in commercial cash flow real estate. All right. So again, these were the 12 tips from my coach, the guy that I listen to, my guru, the one that I paid to make me the best real estate investor on the planet, Grant Cardone. So number one, not investing in commercial cash flowing real estate. All right. If it does not cash flow, you don't need to do it. That's why I do not like, people ask me all the time, should I buy a piece of land? Should I buy this piece of dirt? And unless you're going to build on it and do something with it immediately so it can start to cash flow, I don't like land. All right. I mean, I don't hate it, but it's a bit of a long play. All right. They don't make any more of it. It does appreciate, but during that time you're holding it, you've got holding costs, right? That you've got to take out of your profit. You've got taxes, you've got maintenance, you've got electricity, potentially water, sewage, whatever that looks like. So you've got a lot of holding costs on a piece of dirt. The payoff on dirt is when you sell it. So if you guys and gals have dirt right now, let's sell it. Let's get you off of it, and let's take that money and let's put it into a 1031 exchange, and let's roll it into a cash flowing piece of real estate. If you've got a piece of dirt that's 300, 500, $1 million. I've got clients that have got a lot of holdings in dirt. Unless there's a big commercial upside to it, like you're going to sell it to Walmart in 4 years, then I'm going to tell you to hold on to it. But if it's just a residential lot sitting somewhere and you have no plans of using it, it's time to sell it, right? It does not have commercial value or cash flow. And at this point, it's costing you money to hold it, okay? And the upside doesn't come for 3 to 5 years until you sell it. Tip number one. Tip number two of the mistakes made by real estate investors, it's not knowing your market. boy, like when you come into a market, when you make a decision, I have people call me, y'all, from all over the country. God, my nose is like itching today. People who call me from all over the country. And they're like, hey, I want to get into Austin, Texas. I want to get into Belton, Texas. I want to get into Georgetown, Texas. I'm like, great. What do you know about the market? What are your goals? And they're like, oh, well, we want you to know about the market. Well, guys, I know about the market, but I believe that if you're going to put your money into something, you need to know about the market. You need to be, you don't need to know what I know, but you need to know why you're going into that market. Like, I really want you to be sold on it. Like, you really cannot get hurt in Central Texas right now. Everybody's coming here, and rumor has it Twitter might even be coming here. We're all obsessed with Elon Musk nowadays. I know anybody who follows me knows that. And hey, we're going out on Twitter Live. So Elon, if you're watching this, give me a call. I got some real estate for you. Rumor has it you might need a new house here in Austin, Texas. But anyways, know your market. And if you don't know your market, be sure that you're working with somebody who understands the market, who understands what's coming to the market, right? Like, you don't want to get into the investment game into some sleepy town that doesn't have an Amazon coming to it or doesn't have growth slated for it, right? Like, just a sleepy town that's been a sleepy town, that's great. Like, and there's some sleepy towns around where I live, and nothing's happening there. It hasn't happened in 50 years. It's not slated for the next 50 years. Probably not. It might not be a bad place to live. Might not be a bad place to live, but it's not a great place to sink your money into to become an investor in that town, right? All right, so that's number 2. Number 3, not dealing with dollars and cents. Like, you've got to know the money. You've got to know what you're getting into. I'm going to pencil the deal for you. I'm going to show you the underwriting on it. I'm going to show you why I believe it's a good deal, but you've got to understand it too. And you've got to get your mind around it. And I will tell you, I do more deals. I show people deals on a piece of paper with a pen and a calculator. I just do. I've had people lay things out to me on spreadsheets, and I'm just like, oh my God, just show me the numbers, show me the money, right? And so you've got to understand the money. I like this one that Grant talks about, not buying through every cycle. So these are the mistakes, right? Not buying through every cycle. Every cycle is either a buyer's market or a seller's market. It just is, right? So you need to know what cycle we're in. And it was interesting. We were on a call yesterday with Grant, and he talked about the fact, and I know what it was. They were talking about the fact that that they were these guys were trying to buy this property. And the seller said, well, if you give me this much money, I'll go ahead and sell it. And Grant said, he's not really a seller, right? In this market, in this environment, in this temperature of what's going on today on planet Earth, you got to have a seller that wants to sell, and you want to work with a seller that's motivated to sell, right? Like, gone are the days of throwing out a price and thinking everybody's going to jump on it. You've got to be really, really smart with your money, with your dollars, with your research, all of the above. And why is that important? Because we want to make sure, going back to number 1, that you cash flow, right? We don't want you to get hurt in an investment deal. We want you, and so they're a little bit farther apart nowadays than they used to be. But there's going to be plenty of opportunity coming down the pike in the next 12 months, because there's going to be a lot of sellers out there that truly want to sell. They're not just fleecing it, right? You know what it means to fleece it, just to put something out there and see what happens. No, they're going to be bona fide sellers. Like, I've got a note due on this deal. I've got to refinance it. I'm leaving this area, whatever that looks like. I need to sell. Bring me a deal. Okay. Those are the kind of sellers I look for. Not the willy-nillys. Oh yeah, I'm going to put it out there, and if you pay me all the money in the world, then I'm going to buy it. Nah, not a good deal. Number 5, mistakes made by real estate investors, per my friend Grant Cardone and my coach. Buying too small, right? You need to maximize. Like, we need to figure out what is the most we can get you for the money that you've got available and what you qualify for. You got to max it out, because 3 doors is going to pay you more than 2 doors, and 4 doors is going to pay you more than 3 doors, and 12 doors is going to pay you more than 4 doors, right? I think you get it. So it's not just jumping on the first deal. It's looking at several opportunities, and how do you take this much money and make this much money in a cash flow situation and have this much opportunity for future appreciation. Number 6, this is a biggie. If you have single family rentals, It's time to sell. It's time to sell them. It's time to get into multi-doors. A single family, here's a prime example. I just sold a gal, a former employee of mine. She's wonderful, young, beautiful, and she wants to become an investor. And so we sold her a triplex. That's 3 doors, brand new construction. So it's like 3, I want to say there were 1,600 square foot properties put together, right on a main thoroughfare, right by a private university, like primo for college rentals. Sales price was $775. Okay. Each one of those 3 units is going to cash flow $2,000 a piece. So that's $6,000 in cash flow on a $775 investment. I've got, if you go and you look in our MLS on homes that are valued, single family houses that are valued at $775, they're getting $2,500 to $3,000 a month in rent. So that same $775 investment that my client made, we closed it Friday, my one client made, she's making $6,000 a month off of it. I've got clients who have single family properties that they're leasing out because they're like, well, they're appreciating and I'll wait on the appreciation. No, because you're losing $3,000 a month and they're not appreciating $36,000 a year. We need to take that money, move it into a multi-door situation so that you double your cash flow. Does that make sense? Put it in the comments for me. I can't see the comments right now because I've got all these banners I want to put up, but I want to see the comments later. It's all about cash flow. The more doors, the more flow. All right. And I'll tell you, my friend and my coach, Grant Cardone, has had to beat this into me for a couple of years because I'm a residential real estate agent. And so, I believe everything lives and dies with residential real estate. But if you're an investor, we can do better. We can do better. All right. Number 7, not looking at enough deals. Right? Deals are everywhere. So do you know what I do every morning now? Because I invested in myself. I joined the real estate club. I spent $25,000. I got, I don't know, 3 weeks ago. And I was filming that show that you guys saw me film in Austin with Grant, his Real Estate King show. And I'm literally looking around for the other guys and gals that were pitching deals to Grant. And they didn't even live in my town. Some were from out of town. One was from out of state, Houston, Dallas. And I'm just like, they got my money. They got my money and they got my deals. Like, this is my town. I need to know where all these deals are. And I need to know how to find these deals. And since that has all happened, I am privy to several deals. I'm working on a couple of them right now. I know for sure one of them is going to come to fruition. And so, you got to look at deals. It's kind of like marrying the first guy you date. You don't want to do it. You want to look at a lot of deals. I know someone's going to blow me up for that one. All right. Number 8, unable to move to, the mistakes that people make, unable to move to other markets. You might be in a market right now that was really good 2 years ago. It might've been really good during the pandemic. Like, I saw some of these like really remote markets that people are like, oh, I don't want to live anywhere near people. Oh, I'm going to go buy in, I don't know, Idaho or Montana or some small town, USA, right? Well, now that things have cleared up and everyone's realized that we're going to survive this, now they're like looking around going, oh my God, I live in Podunk, USA. Like, I need to move my money to another market. I need to look at other markets. There might be other markets that are expanding faster. There's better cash flow opportunities so versus staying in the market you're in and just having like a mediocre return, pick up that money, be open to moving to other markets. All right. Number 9, using too much debt or not using debt. I'll tell you guys, this is one I've struggled with, and that's the not using debt. My husband and I do not like debt. We own a mortgage company and we hate mortgages. Go figure. So, we are cash buyers when it comes to most of our real estate. And so I'm really getting into getting my mind around mortgaging some stuff. And, when we were younger, we had to mortgage stuff, but we haven't had to in a while. And so we thought that was really good and it was really safe, but it's really dumb. And I'll tell you, I fought with Grant on this. Grant and I fought about this for 2 years. He'd call me and say, what are you doing now? And whatever. And I'd be like, oh, but I own my house and I own this and I own that. And he's like, that's dumb. Now, I have not gotten my husband to the point where he thinks, oh, that's dumb, but I think it's dumb. Right. And so moving forward, I will leverage OPM, other people's money. Right? OPM. Then, of course, if you over leverage a property, if you overdebt it, right? Like you don't have enough money to put down. And so now all of a sudden you've got this high operating cost, this stranglehold on you because the payment is so high. You're under pressure because the rents are barely servicing the debt. And then, not only do you have debt and you've got investment properties, but you've got maintenance and taxes and insurance and hopefully property management if you've got a brain, because you don't want to property manage this stuff yourself if you don't have to. So, now all of a sudden you're in this stranglehold, and that's because you didn't have enough equity going into the deal. So that's part of why you want to work with a professional, work with someone like me, is because I'm going to sit down and I'm going to give you the real numbers. I'm going to be like, you know what, that might be a little too much property. We may need to come down to this property so we can put in a proper down payment and that you're not under a chokehold when it comes to carrying debt and expenses and things like that. Number 10, buying on price and cap rate. Guys and gals, there are so many different things that you have got to look at. It's not just the price and the cap rate. You got to look at the cash flow, right? You might be buying it at a great price and a great cap rate, but if it doesn't cash flow or you don't have the opportunity to force the appreciation by raising the rents. That's a strategy when you're a real estate investor. There's the quickest way to value up a property that you've invested in. You raise the rent. Higher the rent, the higher the value. It doesn't have anything to do with the sticks and the bricks and the dirt underneath. It has to do with what are you collecting in rents. All right. So the mistakes that we're covering right now are the mistakes that investors make. And that is just looking at, this is a great price and I like the cap rate. And, it's a 5 cap, 6 cap, whatever that looks like. This is great, but it doesn't cash flow. What? It's a problem. Big problem. Or you don't have the ability, right, to raise the rents because you look around and it's like, it's a class B or class C and the class A is going out at the same price that you want to raise the rent to. Well, and nobody's going to pay those, right? So you've got to look at every single piece of the deal. And boy, that's what I'm really, really getting my mind around when it comes to the multifamily stuff. You can tell I love it. I'm so obsessed with it. I can't even stand it. Number 11, buying deals nobody's competing on. Now, think about that. It's so true, right? Like if you're looking at a deal, any deal, and it's been on the market forever and nobody's put it under contract or whatever, like you want to get to the bottom of why not, because that means everyone else has walked around it. You don't want something somebody else has just so you can be an investor. You're better off competing on a hot deal. I know that's a bit counterintuitive, but it's not. If it's a good deal, it's a good deal, right? And even if you've got to pay more, when you look at the upside and you look at the cash flow and you look at the opportunity. So don't buy deals that nobody's competing on. And I love this. And this did come from Grant Cardone, for those of you who are on his email. He says, use a broker, and I put broker/realtor. You've got to work with a professional. I'm not going to go try to write my own will. I wouldn't try to go get my own divorce. I would not try to diagnose my own illness. Like I'm going to go work with somebody. I won't even try to do my own Pilates. I have a coach. All right. You've got to have a coach. I'm not going to go out and try to be the greatest guru when it comes to real estate investing in Texas without a coach. So I hired Grant and his team. All right. I want the best coach on the planet. You ought to want the best coach on the planet also. Difference between you and me is I had to pay my coach $25,000. You're not going to have to pay your coach. When you work with a licensed realtor or broker, we get paid by the sellers. So our fiduciary responsibility is to you, is to make sure that we get you the best deal that we know how to put together for you. All right. So if you're out there and you want to get into the game, you want to know more about getting into the game. Like you're curious, like, okay, Lisa, I want to talk to you about, like, I own 7 single family residences. What's the plan? I can give you a plan. I can tell you what we're going to do, how we're going to do it, how we're going to repurpose that money and put it back into multifamily. Right. So just shoot me an email, lisa@lisacopeland.com. Let's say, you just want to get into the game, period. Because I'm going to tell you all this. If you're renting right now, get out. The asset's on sale. Rates are decent. They're not great, but there's several ways to buy down the rate and to have the seller pay for that. And so let's get you into something. Let's start somewhere, somehow. Get your toe into the water, because otherwise your interest rate is 100%. It's 100%, and you're paying the other guy or gal's mortgage. You're forcing the appreciation on the property that you're paying rent on, meaning you are upping the value of their property every time you write that rent check. All right. And I'm telling you, they're going to raise your rent in a year, because that's the way that we teach people. That's how I teach my clients. You raise that rent every year. We've got to push the appreciation on that property for you, right? To make it a good investment. And if you just want to check out and look around, my website is sellingcentraltexas.com. Everything in Central Texas MLS is on there. And I'm gonna go back to the comments now so I can look at them. Okay, good. Lisa Reyes, thank you so much. This was great. Appreciate you. Yeah, if you guys and gals have any questions, if you simply just want to know more, if you're in the real estate business and you're like, God, like I love what you guys are doing over at the agency with Tariq Al Musa, and you want to have a confidential conversation with me about, getting out there and, joining our team, finding out everything that we have to offer. Because I will tell you, we're all about leveling up. We're all about 2023 being bigger and better than 2022. Like, we are in the no recession zone over here, because there's always opportunities in real estate. It just pivots. Like, the opportunity in the last 2 years was to get a 3% interest rate. Okay, great opportunity. And lots of people took advantage of it. Good. Yay. Gone. Now the opportunity is to buy the asset, the property, the investment, the house, whatever we want to call it, the asset. Now the opportunity is to buy it on sale. And that opportunity is so much greater than it ever was getting a cheap interest rate, because where you make money is on the way that you acquire an asset. It is made at acquisition. And so if you can acquire it for less money, even potentially below market, let's go make some acquisitions for you. I'll show you how to finance it. I'll show you how to get a lower interest rate. You guys know I own a mortgage company. I still do, but not even that as much as I know the mortgage game. I know it better than anybody. My business and personal. Okay, good, Pam. Pam, are you already on our team? I think you're already on our team. But so, like, I can show you every hack that there is to be able to fix the money. Where I could never show you a hack in the last 2 years was how to buy the asset for less money. There was no hack. There was 10 offers behind us. And so we had to do things like pay over list, no inspections, forego repairs, no appraisal. I mean, just crazy stuff. But you know what? It was what it was. But now you've got you have such a unique opportunity to buy these assets on sale. Ladies, in 2023, we are going to bridge the wealth gap for women. Me and my team, we are convinced, we are committed. I'm just going to say this, but there are no dates yet. Mrs. Elena Cardone will be coming to Dallas, Texas, and kicking off our speaking tour sometime in January. And that's really all the details I've got. But I do have her confirmed that she will be coming. And we are we're going to hit it this year, and we're going to hit it. And we're going to show you how to take an IRA, put it into make it a self-directed IRA, put it into real estate, forget the stock market, cash flow, build generational wealth through real estate. We're ready. We're armed to do it. We're going on the road. We're going to do lots of videos. I'm always open to a conversation, whatever you all need from me. No questions too small. And I will, here we go. Facebook user. I just got my clients 10K under current list and 54 under the original list price. The assets are on sale. The assets on sale. We'll figure out the money. I promise you, we'll figure out the money. There's 3-1 buy downs now, 2-1 buy downs. And if you refinance those 2-1s and 3-1 buy downs that we have the seller pay for, that delta, that money goes back against the payoff. Guys, there's so many hacks right now. It's crazy. Like, I am like the hack researcher, because again, I've got so many years in the mortgage business. I know the game, and I've got the greatest coach on planet Earth with my good friend, Grant Cardone, and greatest partners in the world. And we're ready to help you blow up 2023, build generational wealth, bridge the investment gap for women. And anyways, I hope you all have a great day. We'll talk soon. Bye-bye.